Good afternoon, everyone. I hope you all had a wonderful holiday. You spent time with your family and loved one, and you still continue to do so, taking a full advantage of the time off from your busy working. I know the holiday is coming to a conclusion, and now we should start thinking about preparing the upcoming tax season. My name is Gamacho Hussein. I'm with the AG Tax Services. I would like to share with you some tips how to maximize your tax return for upcoming season. Step 1, medical expenses are tax deductible. It includes prescription drug, eyeglasses, or contact lenses, dental care, chiropractic, or physiotherapy treatments. All you need to do to take advantage of this deductible to your full benefits is collect receipts. Collecting receipts for an entire year is very hectic. Sometimes we misplace them, hard to find it when we need them. Normally, if you go to a particular pharmacy, one or two, you go back to that pharmacy and they will be able to print you a receipt for an entire year, whether for you and your family members. For eyeglasses, physio, or chiropractor, take a photo when expenses occurred, and photos are easier to access later on when you need them. I'm not quite sure if this business is safe of keep the record and able to print you the receipt for the entire year, but you can find out. If they do, your life will be much easier. Charitable and political donation are tax deductible too, so be sure to keep your receipts. Charitable organization include any religion or agencies, whether it's national or international. Political organizations are nationwide. Political parties are nationwide parties, whether it's the federal or provincial. Just keep your receipt and then take a full advantage of it. Let me talk more details about the deductible. Let me go back steps. Medical expenses are anything above 3% of your income. If some people have quite a bit of expenses in a combination of the prescription drug and dental or eye care, that they can claim that could add up more than 3% of your net income. Even if the total saving that you make is about $100 or $200, credit is a credit. Anything counts toward to the tax saving. So take a full advantage of it. The second step is RRSP. RRSP is another tool that we can take to maximize our tax return savings. For this, we need a little bit of a preparation. All we need to do is pay attention to the last pay stub in December. It has about 95 or more of your annual earning, especially the column that says the pay period. If that last day falls into the last week of December, that's your last pay stub for the year. If not, the first pay stub in January will be your last pay stub for the year. So take this pay stub to the tax pro and see if you owe any money to Revenue Canada. If you do, buy only RRSP for the amount that you need. Don't buy anything extra. The reason I'll talk about it more later on, because RRSP is not totally tax saving, but it's a tool that we can use to borrow money from the government today and then pay them back down the road, whether it's 10 years or 15 or 20 or 30 or 40 years, whatever that time period that you invest this amount. If you are a self-employed, you should tally up your total gross income and your total expenses. The difference is your net income. That's what your taxes are based on. Some people do make an installment payment during the year of the CPP and federal taxes, but many people don't. However, RRSP the medical expenses are not going to eliminate the taxes for the self-employed people, but it can minimize it. That's why we need to do the preparation. If you have a corporation, have a plan of how much salary were you claiming. Corporation normally issue a T4. T4 is taxed as any other T4, whether it's self-employed or not. But your own corporation, you are in control. You can decide how much income are you going to claim. What is RRSP? Many people assume RRSP as a tax saving tool. It is, and it is not. I'll explain more. RRSP is a tax deferral. It will allow you to defer the taxes that you owe to the government for a later date. What this means is, instead of paying taxes today when the income earned, RRSP allow you to delay it for the later date. Let's say, so you're retired. For example, if your income is $50,000 today, and you buy 5,000 worth of the RRSP, so your income will drop down to 45. That's what your taxes are based on. You take this 5,000, you invest it into the portfolio, whether through your bank or private investment groups, and you should be able to gain substantial amount, depending on how long you keep it in an investment, whether it's 10 years, 15 years, 20, 40, whatever. So that's one advantage. The second advantage is a tax bracket. During the employment years, if your income is between $49,000 and $97,000, your tax bracket is 20%. If your income is less than 49, your tax bracket is 15. The assumption is that the average income for many people after retirement will be less than 49, and therefore it's 15% tax bracket. So if you pay taxes at 20% during employment, now you're retired, you're paying a 15%. The 5% difference is your another saving. But if your income is higher, probably you save even more. So this is the second advantage, and we should, not many people take advantage of these tools that are available to us, and I hope you start doing so. When you withdraw or take money from RRSP account, it will be considered as an income. You will be taxed at your tax bracket rate. That's what I just mentioned in the previous screen. I'm just gonna skip to the next one. I hope this information helped you maximize your tax return saving. For more and specific information, please reach out to me, and I will be happy to provide you an individualized tips, because not everyone are in the same situation. Let's say, for example, some are singles, others are couples with the kids. As I mentioned earlier, my name is Gamachu Hussein. My phone number is 403-589-0766. My email agtaxservices@info@gmail.com. If you call me or text me or send me an email, I will get back to you with a suggestion. I hope you like this information I have shared with you, and you are able to maximize your tax return savings. Please share this video with the people you know who may benefit from this information, same way as you. Don't forget to subscribe to my channel and like this video. Stay tuned for the next video. I will compare RRSP to tax-free saving. Ideally, if you can take advantage for both available tools, it will be great. If not, you can decide which one works for you. Thank you for watching, and have a wonderful day.